Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And guys, in yesterday's video, I talked about signs if the bottom is in, the 390 level must hold, okay? The 390 level was based on the 23.6 retracement level from January high down to June low, okay? And I talked about the significance of this level, this Fibonacci level, okay, in yesterday's video where I went back in time on the charts looking at the past bear markets, the 2008 market and the 2000 bear markets, and I said in the 2008 and the 2000 for the bottom to be in, one of the signs we needed was for the 23.6 retracement level to defend. As you can see here, it was tested multiple times and it defended. This 2008 and here's 2000, the 2000 bear market, okay, it defended. All right. And then you look at what happened this past week, we can say it defended. All right, we got over an $8 pop today with that defending. So the question is the bottom in, Uncle Charles? And here is my answer. My answer to that question is I do not think the bottom is in just yet. Okay, so the reason is I'm going to show you guys, we're going to, like yesterday, we're going to go back in time, but this time we're going to go a little bit more in depth. So as you can see, in the 2008 bear market, the 23.6 retracement level defended, okay, as it happened this past week. Great. However, there's a couple other things that we need to watch out for signs that the bottom is in. One of them is the 200-day moving average, okay? So while the SPY back in 2008 was able to recapture the 23.6 retracement level, it also cleared the 200-day moving average as another sign. Okay? We move out this 200-day moving average and we go back to a previous pivot low in this bear market, like this one, for example. All right? Kind of had like a double bottom over here. You can see that the SPY also cleared the 23.6 retracement level here as well, but it did not clear the 200-day moving average, thus leading to more downside. Okay? So as of right now, we are still below the 200-day moving average. Okay, 200-day moving average currently around 427-ish. All right? Another sign we need to watch out for: the downtrend line, starting from the top and connect somewhere. All right, another pivot high, right? And we cleared that. You see, we cleared it before it led to more upside to put in the bottom. Okay? Looking at the current daily chart, I have a trend line here starting from the high. Where the bear market started, pivot high right here around March, or right here late March. We never broke out of that. Okay, so pretty much what I'm saying, guys, SPY still has a lot to do before we can say that the bottom is in. It needs to clear that 200-day moving average, and it needs to clear that multi-month trend line from where the bear market first started. Does that make sense? So as of right now, it's around 427. SPY needs to get above 427. At this point, it needs to clear 427 for a sign or a bigger sign that the bottom is in. As of right now, yes, we defended the 23.6 retracement level, but Uncle Charles is still not convinced. Okay? However, I know I sound a bit bear biased right now, but I promise you I will not trade biasly. Okay? So let's get to the levels and the setups, all right? Today, the SPY cleared the 50% retracement level, okay? I have the fib level from June low to August high. The 50% retracement level was at 397. SPY closed above it today, okay? Keep in mind, yesterday, the SPY bounced off the 61.8 retracement level at 388.7-ish, and today, that led to clearing the 397 level, all right? So, as long as 397 holds, I got next resistance at the 399 to 400 level. Okay, 400 level based on July 22nd high. All right, 400 clears. I have a level up here around 401.5-ish. All right. That aligns with August 31st and September 2nd high. Got strong rejection around that zone. And it's also around where the 50-day moving average is, around 41.2-ish to 0.5-ish. Okay, guys? If we can clear and recapture the 50-day moving average, that would put 43.5. That's based on this multi-year blue trend line that I got. If I scroll to the left, you guys can see here, starting from January 2018 high to February 2020 high. Okay, we've got a bunch of tests again over here around October 2020. All right. So that, based on that multi-year trend line, I got a level at 43.5. And if that clears, I got the 38.2 retracement level at 405. And above that is 407. That's also the 38.2 retracement level based on the fib levels from January high down to June low. Okay? So, bottom line for the bull case tomorrow, 397 must hold. All right? If it pulls back or it base, it must stay above 397. Okay? To be bullish or for the relief rally to continue. Now, for the bearish scenario, since we cleared 397 today, if 397 fails tomorrow, that would put SPY in a false breakout scenario. Okay, a false breakout setup. False breakout of very bearish, and that will put lower targets back in play. Okay, 394-ish, 393-ish, and if below 393, we can possibly go test this yellow trend line again, which is around 390. That's an area of confluence with the 23.6 retracement level. Okay? If 390 fails, guys, like I said in yesterday's video, that's a big sign the bottom is not in. I still don't think the bottom is in yet because we have yet to clear the multi-month trend line from where the bear market started, and we're still below the 200-day moving average. Okay, so you guys got my setups, got my levels. Now it's up to you guys to trade it unbiasedly. I'm going to move on to Triple Q. Triple Q lost the 61.8 retracement level yesterday, okay, from June low to August high. But I mentioned it needs to recapture 294. That was a 61.8 retracement level to be bullish. That will give us a false breakdown setup. And as you can see, we recaptured 294. We went as high as almost 300, 1 cent off of 300, okay? But we managed to recapture. I had a level around 296.7-ish. We recaptured that level, and we were just under my 299.4-ish resistant level, okay? So support is now 296.7 with 294 below that, okay? As long as support holds, we want to see 299.7 clear, if you're a bull, that is. That will put 302 in play, okay? 302 is very critical. That's the 50% retracement level from June low to August high, and it's also the 23.6 retracement level from November high down to June low. Okay, so 302 is very critical. Above that can be very bullish and a big win for the Triple Q bulls. All right, so remember, 296.7 and 294 support must hold to be bullish. If any of those support levels fail, look for puts or look to short. Okay, below 294 puts 291, then 289 and 287 back in play. All right, moving on to Tesla. Now, yesterday I mentioned how Tesla broke down this trend line, this green trend line that I got, and to recapture it, it must get back above 276.5. As you can see, it recaptured, gave us a false breakdown scenario. Okay, it's all about the setups when you're a day trader. Okay, but it also recaptured. I had a level around 280.6, excuse me, 280.6. That's based on the previous high on July 22nd. All right, that's now support. As long as it holds, that keeps 286 resistant level in play. Okay, that is based on my 38.2 retracement level from the high back in November down to the May low. All right, so above 286 is very bullish for Tesla. All right, and that would put this have this trend line from August 16 high connected to August 25th and August 26th high, and the breakout levels around 289ish. Okay, so very bullish above that, and would put 295 back in play. All right, guys, so that's what I got for Tesla. I'm gonna end this with the option flow. Okay, so this is SPY 85% in the put, something that does stick out towards the end of the day around 250. we got big size order of puts right here around 6.6 million, 7.2 million in premium, 10,000 over 11,000 here, 380 strike price, but it's pretty far out the dates. Okay, in October, so they got time. But something that sticks out that I watch for is where they entered, which is around 397.48 over here and 397.71. Okay, so I keep those levels in mind. But overall, bearish on SPY. Looking at Triple Q, 54%. Okay, not too bearish. Nothing sticks out to me here. Okay, but pretty bearish. Not as bearish as SPY. Tesla, 74%. Pretty bullish. Okay, nothing sticks out here. But there's the option flow. Okay, guys? So thank you guys so much for watching. If you guys are interested in joining a profitable trading community, please consider joining my Discord. Had a really cool plan today. A bullish plan where we said we was going to get calls above 392. Okay? Right there. Calls above 392. And it worked out really well. That's just one of the many trades, or setups that I call out each day. All right? But thank you guys for watching. Peace.